When it comes to trading in Forex, I was an unprofitable trader for years on end, just burning through personal capital and funded accounts until I found this one confluence for my entries. So if you're able to identify this, then you're going to be able to identify valid trades within the markets. Hey, how's it going everyone? Welcome to a new video. Today what I wanted to discuss was how I identify and validate an accumulation session, what an accumulation is and why I utilize it in my day-to-day trading plan. And this is a very important confluence because it essentially outlines whether I'm going to be trading for the day or not when it comes to looking at the charts in the morning. So when you see all of those profitable and professional traders getting onto the markets in the morning, starting up their streams, and after 25 minutes they've jumped off and they're down at Starbucks getting a coffee, this is the one confluence that allows them to go ahead and do that, and I'm going to break it down today. So let's go ahead, jump into the charts and show you exactly what an accumulation session is. So first of all, what is an accumulation session? Well, an accumulation session is essentially where we have a non-trending market. So what we look for is we look for a market that is basically pushing up and down and creating sort of a ranging sideways movement that we can go ahead, identify, mark out, and then look for liquidity within to sweep and then find confirmations to enter our trade. So when we come to the charts in the morning, what we're looking at first of all for myself personally, because I trade during the London session, is the Asian session accumulation range. This is what's going to be seen as our accumulation, and now I'm going to break down what exactly we're looking at. So first of all, what I want to go into is how do we identify our Asian session and how do we know the times in which to place our Asian session onto the actual charting platform itself? Well, in order to do that, what we need to understand is daylight savings. So if you go ahead and look at my screen now, as you can see here, we have the Asian session impact with daylight savings, or DST for short. So when we enter each different period of the year, our Asian session range is essentially going to change the opening time and the ending time of that session. Now the reason why this happens is because there's daylight savings throughout various different parts of the world at different times of the year. Many UK traders confine themselves to the UK daylight savings, forget about all of the other countries that are also rotating their daylight savings, and end up simply placing invalid trades using an invalid accumulation session to mark out their morning period. So we can simply avoid all of that by utilizing this nice and easy broken down sheet of daylight savings. So it says to start off the year, so the 1st of January, we want to essentially set our Asian session overlap, which is the Tokyo and Sydney overlap, to midnight till 5 AM UK local time. So if you go onto TradingView and you look down in the bottom right hand corner, you're going to have the current time frame that you're in. Now personally for myself, what I do for simplicity's sake is I keep everything in UTC London. So I don't go UTC Lisbon, Dublin, I don't go for any of these. I literally go UTC London. As long as my charts are in that, then I can follow this nice and easy sheet every single period of the year, and I'm going to be able to change my Asian session to ensure that it is valid. So just flicking back onto the daylight session impacts that we have here, as you can see, midnight till 5 AM is going to be my Asian session time. So if I'm using an indicator, then I'd want to adjust my indicator times for January 1st to midnight till 5 AM UK London time, as long as I'm running my TradingView in UTC London. So once I've got that, I can then trade all the way through January, I can trade through February, I can also trade through March until the end of March. Now this is where things change slightly. So as you can see here, on the last Sunday in March, the UK moves to BST, or UTC +1 as it's formerly known as. This is where the clocks go forward by 1 hour. So everyone in Sydney, Tokyo and New York remains unaffected. However, the UK moves +1 hour ahead. So this essentially means for us that the Asian session overlap, or our accumulation session, becomes 1 AM till 6 AM UK local time. So all I'd simply do is, if I was using an indicator like I am, because I trade the Asian session liquidity sweeps through something called the Samurai, which is our personally built plug and play strategy of confluences put into a nice and easy to use indicator. So I don't have to do any of the charting myself. All of this is plotted onto the graph. I simply load up each day, I check to see if there's a trade valid. If it is, I can go ahead and enter that trade. If it isn't, then I'll walk away from the charts for the day. But because I've got that coded into an indicator, what I can do is I can load up the Samurai and I can come down to this sessions section here. Now once I'm on sessions, as you can see, is the Tokyo session and the Sydney session. if you remember, what I briefly mentioned earlier is that the overlap of Tokyo and Sydney makes up what we know as the Asian session range. So when people talk about the Asian session, it isn't just one session in itself, it's actually the overlap between Tokyo and Sydney. So what we do is Tokyo and Sydney is midnight till 5. I come onto my indicator, I ensure that Tokyo opens at midnight, and I ensure that Sydney ends at 5 AM. Once that's done, that means that my Tokyo-Sydney overlap is midnight till 5 AM. So if we now look at the chart, as you can see here, Asian session open midnight, Asian session close 5 AM. So this is now my Asian session range. This is essentially my accumulation. Now what's important to remember here is I didn't say valid or invalid accumulation. There's a few more things that we've got to look at that I'm going to break down within this video to ensure that the Asian session range in the morning is correct for the rule set that we're following with regards to it. So let's go ahead and switch back over to the DST sheet. So now we're on here, as you can see, on the first Sunday in April, the Sydney clocks go back 1 hour. So their 3 AM becomes their 2 AM. So from the UK and everyone that's trading within the UK, it looks like Sydney essentially shifts 1 hour later. This means the Asian session overlap becomes 1 till 7 AM. So again, all I would simply do is follow that same mechanism, and I would change this from midnight till 1 and 5 till 7, and that would then be my overlap between the Sydney and the Tokyo sessions. So there you go, this is what we follow throughout the year basically to stay on top of daylight savings. And what's important to remember is that DST isn't just confined to one place and one country. No matter where you're trading in the world, daylight savings happens for various different countries at various different times of the year. So what's important to remember is you stay on top of these timings and you don't just confine yourself to the country that you're trading from. It's important to remember all the other countries' DSTs and stay on top of when those changes are made. So now going back into the charts itself, we've gone ahead and marked out that Asian session range in the morning, also known as our accumulation. Now we need to go ahead and validate this accumulation session. So as you remember, I briefly mentioned before, what we're looking for with an accumulation is this period in time to be ranging. So we don't want there to be a clear directional trend going one way, and we don't want a clear directional trend going the other way. What we want is a sideways movement, like you can see on screen here, where this is not particularly trending up, it's not particularly trending down, it's just creating a sideways movement. Now this can be quite visually difficult to go ahead and identify from just looking at it and going, right, was this a trend or was this not a trend? Because, well, we can look at it differently on the 1 hour, we can look at it differently on the 5 minute, the 2 minute, the 1 minute, the 10 minute, the 4 hour, whatever it might be, we can view this session differently. So we're going to follow a very nice and easy mechanical method in order to identify a valid accumulation session on the 5 minute time frame. So first of all, we want to make sure that we're on the 5 minute time frame. We then want to make sure we're on the pair that we want to be utilizing to look at the Asian session period in the morning. And then we want to actually just scale in and look at the Asian session itself. Now, there's several things that we're going to be looking at when it comes down to this accumulation period. So first of all, what we're going to look at is the opening candle of this Asian session range. Now, the reason why we're going to look at that first opening candle is to see if it's either formed a low or a high within this Asian session range. And when I say a low or a high, I mean the actual session's low or high itself. So as soon as this is opened here, we're within the Asian range up until this point here. So any high or low that's formed within this period counts as the Asian session or the accumulation's high or low. So what we do first of all is we look at this opening candle. Now, was this opening candle the high or the low of the accumulation session that eventually formed? And the answer to this question is no. Now I'm going to break down how we actually go ahead and identify that. So as you can see here, we had the first candle open, which was this green candlestick here in the middle. So we're looking at this candlestick. As you can see, we then entered into this Asian session range. This was the midnight candle. We pushed down slightly. We then pushed up and formed our Asian session high. So the actual valid high of our accumulation session is this high here that formed in the markets. Now, the reason why this is our predominant high, or our session high as it is known as, is because no other high has pushed above this point. So if the market had then pulled back down, and then it had decided to go ahead and pull even higher during this session, that would be our new session high. So all we're looking at is the high or the low point of the session. Was it the first candle that opened? Yes or no? In this case, no, it wasn't. Therefore, the starting of this session is valid. So this is a valid accumulation currently because the first candlestick wasn't the high. So if we'd opened into the markets and this was the high candle here, and then markets had pushed down and they'd never returned to that level and they stay below it, that would be invalid because the first candlestick was the high of the session. So as you can see there, this first of all begins to validate our session. However, we need the entire accumulation to have printed in order to validate the rest of it. So once we've seen that the first candlestick isn't a low here forming the open or a high here forming the open there, we can then move on to the end of our accumulation. Now, was the final candlestick that formed in this accumulation session either a high or a low? So it's exactly the same thing we looked at the start, but now we're looking at it for the ending of this session range. So what do? We're going to go ahead and just identify the last candlestick of this Asian session, and that is the green one in the middle here. Now you might be asking, well, why is it the green candlestick and not this red one that, as you can see visually, the box is closed around? So the reason why we don't count this final candlestick in our accumulation session, even though it is visually being shown here, is because this is the 5 AM candle. Now what I mean by the 5 AM candle is that this candlestick opened at 5 o'clock. So when this candlestick actually goes ahead and closes and prints the price action for us, it's closing at 5:05 AM, and therefore that is outside of our Asian session range. We can't include that candlestick because right now I'm in Feb, and obviously based on our daylight savings that we spoke about earlier, during the months of January up until the end of March, we are operating and looking at midnight till 5 AM as our Asian session overlap. So the 4:55 candle that closes at 5 AM is the ending of our session. Now, if this accumulation period was set till 6 AM, so I changed it from 5 here, what we're not looking at is this red candle here, we're looking at the red candle before. And again, the reason is because this was the 5:55 candle. So when this candle closes, it is actually then 6 AM, and that is when our accumulation period would end based on the daylight savings for this time of year. So it's very, very simple. We're looking at the candlestick prior to the box being built. And essentially after this box is then closed, that's the ending of our Asian session range. We're looking at this candlestick before that final one where the box was drawn around, because that would be the 6:05 candle close, and we're looking at the 6 AM candle, not the 6:05, because our Asian session runs from say midnight till 5 AM, midnight till 6, whatever it might be throughout the year. We're looking at the candlestick before that closes on that hour mark, not the one that closes 5 minutes into that hour. So just looking back at that final candlestick which I mentioned, and I've now explained why it's this green candle here, not the red candle next to it. As we can see, this validates our accumulation again. Why? Because this wasn't the low or the high formed to end off the Asian session range. As we can see here, this was the low that was formed in the Asian session range, and this was the 4:55 close candle. So 4:50 open, 4:55 close. This was the actual low made by the session. This candle that closed here to finish off our Asian session range wasn't at that low point, didn't break that low point, therefore it is a valid accumulation. So what do we have in order to validate it? We have two things. We have first of all our open here, which wasn't the high or the low formed for the Asian session because that was formed at the high point there. Then we have the closing of the session and the final candlestick. Was that either the low or the high of that Asian session? Yes or no? In this example, no, it wasn't, because we had the candle before close at the low. Therefore, this entire Asian session itself is a valid accumulation, and we can look to it to trade and take potential opportunities within the markets. So let's go ahead and not cherry pick any examples, but just break down some more invalid and valid accumulation sessions. Let's go to the 12th of Feb, which is literally the day before the session I just broke down there, and let's take a look at this accumulation period. So first of all, what we're going to look at, we're going to look at the first candlestick open. So this first candlestick here, as we can see, isn't the low and it isn't the high. So because that candlestick isn't the low or the high forming the open of the accumulation, it therefore validates this session to begin with. As you can see, here's the high that's formed in this session. What we then look at is we then look at the closing of this Asian session range. Now we ignore this final candlestick. Why? Because as I explained, that candlestick closes at 5:05, not on the hour mark when our actual Asian session range would go ahead and close. So we look at the candlestick before that, which was this red candle here. Now if I just scale in very slightly, you can see that that red candle made a wick low. So therefore this invalidates the accumulation session. If this candlestick was to close here, therefore it would be valid. If this candlestick was even to close here, it would be valid. Why? Because this candle wick came below and it would have been the actual low formed of the session, but due to the fact that the final candlestick is a low formed of the session, therefore we can't count it as a valid accumulation. So on this day, no trades would have been taken, we simply wouldn't have got an entry and we would have gone on to the next day. So let's go ahead and rewind another example. Pulling up this Asian session here from the 11th of Feb, so just going another day before that, we simply look at all the same things. So first of all, we look at the opening candle of this session. Now, this is a great example to see when I would simply just step away from the markets for the day and I wouldn't be interested in trading. If we had this Asian session finish at 5 AM here, I looked at the first candlestick and I saw that that candlestick formed a low with its wicks. I would simply step away from the charts and I wouldn't be trading this particular pair. It doesn't mean I can't completely trade every other pair, because each pair is an independent asset, therefore it's going to have its own Asian session range and its own printed price action, which could differ from the pairs that you're looking at currently. So always make sure when you're doing analysis, you're breaking down each individual pair that you want to go ahead and trade within the markets. But essentially, this was the low forming our Asian session, therefore it's invalid. Whether this final candlestick makes a high, low, doesn't make one, because as you can see here, this final candlestick was valid because it wasn't the high or the low formed in this session. We're not interested. We need both of these things to align in order for it to be a valid accumulation session. So it's very, very simple. We look at that one confluence in the morning and that determines if I'm going to be trading or not trading throughout the day during the London session. Now, once I have a valid accumulation, let's go ahead and break down a trade example so you can see what else I'd be looking at once I've got that validation. So all I'm going to do in order to find this is simply just scroll back until I get a trade idea. So as you can see here, we have a trade idea. Let's go ahead and break down how we found this trade and how we hit a full TP on it. So first of all, if I just go and hit a rewind so we can't see the trade idea and we don't get drawn away by that tasty risk to reward ratio. Basically, all we're going to do is look at, first of all, the Asian session range. So we have this morning candle open. As you can see there, was this the low? Was this the high? No, therefore it is validating our accumulation so far. And that's very important to remember. We can't just validate it off of that candlestick. We need to also look and compare the ending candle. Once I have that, I then look at the low formed in the session, which is this one. So that is our valid low. I then look at the high formed in the session, which was here. Now what that means is that this candlestick here, which is the final candle, not this last one that closes the box out, but this red one here, that therefore validates our session again, because it isn't the high and it isn't the low formed in the session. The low is formed here, the high is formed here or here. These are equal highs, so either or is our session high. But as you can see, this validates our accumulation. Once we've got that, what we're essentially looking for is the ranging liquidity to be taken out. Now, when you're in a trending market, it's very easy for the market just to form a continuation. And if it's trending bearish, just continue that bearish downward trend and just take everyone out that's trying to buy the market. Vice versa, for if the market is bullish and you're just buying the market, it's very easy for the market to go ahead and take out all of those sellers within the markets. But when you have a ranging period or a valid accumulation, you essentially have neither of those things going on. You don't have a clear trending upwards and you don't have a clear trending downwards. So what we can look at is we can look at the resting orders within the markets, and those are formed by the lows and the highs that I've previously spoken about within the session. So we mark out the highs and we mark out the lows, and we essentially then wait for our manipulation session, which, if you haven't already seen my last video, I broke down the power of 3, which is this exact concept but showing you every single session and confluence broken down to a T. So make sure you go and watch that previous video if you haven't seen it already. But essentially what we wait for is we wait for either the Asian session highs or lows to get invalidated, and then we want to look for further confirmations. And what I mean by getting invalidated is I mean the liquidity gets taken out. So when there's a resting high in the market, as we enter into the Asian session range, which for me personally, I can enter any trades after the Asian session closes for a particular entry model that I trade, which is the Choch entry model on the Asian Samurai strategy. So all I look at is I look at the Asian session high or low. I then see if price has gone ahead, wicked, candle body closured, any kind of taking out of that liquidity suits me. So for example, if I'd not seen any of these candlesticks print yet and I'd seen this wick here, that is my liquidity sweep. That is the resting orders at the highs of the previous accumulation getting taken out within the market. So once I've seen that get taken out within the markets, I'm then essentially looking for a change of character to the downside. I'm going to mark my change of character at this low point here and see if the markets want to go ahead and close through it. As you can see, the markets went ahead and closed through that point there with a candle body closure, therefore validating our trade idea for a CHOCH retest. So once we've had that change of character, we can get in on a retest of that entry point. So as soon as we've retested, we target the opposite side liquidity, because these are essentially levels in the market we can look at to go ahead and chase price and get money extracted from the markets by targeting these levels. So we go ahead, target the Asian low, and we allow the session to go ahead and print out price action. As you can see there, we went ahead and hit a full TP within the market at that Asian session low there. And what's interesting about this is what I've just spoken about. These points of liquidity within the markets are essentially levels that price draws to. So once we've drawn to that level in the market, it is likely that we're going to see another reversal. As you can see here, we drew to that level, we took out the liquidity, we had some sideways consolidation, and we then pushed up and would have hit an entire stop loss on our trade. This is why understanding the reasoning behind your stop loss and take profit levels is so important within trading. Don't just enter a trade on a whim and hit a big profit target as your take profit level because it's a good number and you feel like price might go there. Have some understanding and some reasoning behind the levels that you're setting within the market. So once we've gone ahead, taken that TP, that's me stepping away from the markets because the opposite range was hit. Once the opposite range is hit, we know that the liquidity from either the up or the downside has been taken out to form our trade idea. And then we've had a take profit or a stop loss level hit at that opposite range liquidity. Now in this example, if we were to have a stop loss and the price came up here, took out this other liquidity and then pushed back down to the downside, we could look for a change of character and entry and then still to target that same liquidity level. This liquidity is valid until it gets taken out within the markets, but that's essentially the reasoning behind the take profit logic from the trades that the samurai plots onto the charts. But we need to ensure every single day when we come to the markets that we have a valid accumulation session formed by the things that I spoke about within this video. So I hope it's been interesting. I hope you've gained some insight. And as I mentioned, if you want to learn about the other confluences and reasons for entries that I take my trades, go ahead, watch the last few videos that I've posted. It's going to break those down for you to a T. And then make sure that you like this video, drop a comment, and I'll catch you all in the next one.